Binance is about to do a $1 billion deal, and is Solana making a huge comeback? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Barry Silbert, the CEO of Digital Currency Group, gave his shareholders more details about his company Genesis Capital's lending division that was forced to halt customer withdrawals in the aftermath of FTX's November collapse. Writing in a letter to investors, Barry said that this past year has been the most difficult of my life, both personally and professionally. Bad actors and repeated blowups have wreaked havoc on our industry, with ripple effects extending far and wide. He noted that DCG has cut jobs and is winding down its crypto asset manager HQ. In a Q&A section, Silbert got into the controversy around Genesis and its customer Gemini, the crypto exchange founded by the Winklevoss twins. Gemini's lending arm halted withdrawals in November, which locked up funds belonging to investors in Gemini's Earn product, leaving Gemini scrambling to figure out how to get its money back to its customers. Gemini is calling for Silbert to step down as CEO of DCG and officially canceling the Gemini Earn program. Gemini has raised questions about the movement of money between Genesis and DCG. In his letter on Tuesday, Silbert said DCG had borrowed from Genesis Capital, but these loans were always structured on an arm's length basis and were priced at prevailing market interest rates. As for DCG's role in Genesis Capital attempting to restructure, Silbert said because of the outstanding loans and the promissory note that DCG owes to Genesis Capital, DCG executives have no decision-making authority related to any restructuring of Genesis Capital. It's starting to look like Binance US's $1 billion deal with bankrupt crypto lender Voyager to buy its asset is coming closer to reality. U.S. District Judge Michael Wiles of the Bankruptcy Court for the Southern District of New York approved disclosure statements explaining various aspects of the proposed plan to sell Voyager assets during a hearing Wednesday afternoon, but asked the attorneys working on the deal to revise the proposed order documents before he approves them. The deal, which will be the subject of another confirmation hearing in March, also needs approval from the majority of Voyager's creditors. The proposal deal received opposition from the Securities and Exchange Commission, state regulators, the U.S. trustees, and private parties. A spokeswoman for Voyager said the debtors submit that we have performed due diligence on Binance US, and Binance US's financials show that it has ample cash on hand to pay debtors up to $35 million in cash, the maximum amount that may be due. Binance's revenue has grown substantially over the last 2 years. The on-chain data analytics platform CryptoQuant recently published a chart that demonstrated the annual growth of Binance over the past 2 years. The annual revenue of Binance is said to have experienced a 10x. In 2021, Binance's quarterly revenue began to increase dramatically, and the trend continued throughout the year. In 2022, the crypto exchange's yearly revenue hit over $12 billion. According to Messari, the two well-timed events, the Bonk launch and Vitalik tweet, launched this new Solana rally. Messari shows how Vitalik's sentiments may have affected the price of SOL. Messari showed that the daily active wallets on the Solana blockchain did not fall throughout the FTX drama. From the transaction volumes on-chain, the number of active wallets went up during this period. Besides that, the gas fees on the Solana network have remained low, and Solana developers have continued to release updates throughout 2022, and they seem to be working well. Solana has been running with 99% uptime for the last 3 months. According to the January 5th All-Core Devs meeting, Ethereum developers are preparing to deploy a public testnet for the highly anticipated Shanghai hard fork in February 2023, with the mainnet implementation tentatively scheduled for March. Ethereum's core developers emphasize that staking withdrawals are a priority, and code related to EVM object format changes, or EOF, was removed from Shanghai to ensure that the focus remains on staked withdrawals. There's currently 15.96 million Ether locked in the Beacon Chain deposit contract. Additionally, the network is just days away from reaching 500,000 validators. The Shanghai hard fork will be the next major upgrade for the Ethereum development team since the merge. As the withdrawal date for unstaking ETH closes in, tokens powering various liquid staking protocols like Lido Finance and Rocket Pool are enjoying a hefty rally. Lido, the governance token powering Lido Finance, Ethereum's largest liquid staking protocol, gained over 7.2% in the last week and trades around $1.81. Intense trading for the liquid staking derivative crypto pumped its daily volumes across multiple exchanges to 276 million, a 436% jump over the previous days. With a market cap slightly above 1.5 billion, Lido is now the 31st largest cryptocurrency. DeFi Llama has also created a dashboard for tracking total value locked in Ethereum liquid staking, where you can see Lido sits at almost 75% of the TVL, with Coinbase following at 15% and Rocket Pool at 5%. Last week was extremely rewarding for Lido, as Lido Finance became the largest decentralized application in terms of total value locked, dethroning DAI's creator MakerDAO. In 2022, Polygon has managed to make important strides in the cryptocurrency market. In addition to the partnerships that have marked the history of the Layer 2, it has managed to establish itself as the leading scalability network for Ethereum. All the developments of the past year have earned Polygon a place in the top 10 by market cap. Layer 2s show a strong focus on network security. Therefore, the newly approved Polygon proposal has an evaluation system that helps the community to identify which validators have good or bad performances. Validators that are not performing well will be eliminated so that Polygon's security is maintained. The entire process of removing the validator will be transparent so the community can check on what's going on. Without a doubt, it's a very important step for MATIC delegates. They need to choose who their validators will be and entrust their tokens to them. Having a system that shows healthy block producers is essential for the trust to be maintained, and this is a major development for Polygon and its community. Ethereum Layer 2 on-chain activity has been increasing to the extent that the leading two networks now process more transaction volume than the mainnet of Ethereum. Layer 2 networks Arbitrum and Optimism have seen an increase in transactions over the past 3 months. And aside from a few spikes, transactions on the Ethereum network have declined by around 33% since late October. This has enabled the Layer 2s combined to flip Ethereum for this metric, according to Dune Analytics. Layer 2 ecosystems analytic website L2Beat reported that Layer 2 activity in terms of transactions per second surpassed that of Ethereum in October and has remained above since. Another Layer 2 which is exploding is Polygon, which we just posted a full spotlight video on and why we think it will be huge in 2023, which I'll put in the description down below.
Polygon acquired Hermes Network in August of 2021, and as a result, the two blockchains merged. That was the first time that such a merge between two chains actually took place.
Coinbase Global has decided to cut down its employees in Japan, citing the reason of extreme market conditions as part of the reason for laying off 20% of the global workforce. The spokesperson for Japan's Coinbase unit said in a statement, "Due to the current market conditions, our company has made the difficult decision to reduce our workforce in Japan." But despite the continued layoffs, ARK Invest, the investment firm led by Cathie Wood, purchased another 33,756 shares in the crypto exchange Coinbase on Tuesday. The purchase is worth roughly $1.45 million based on Coinbase's price, with the shares allocated to the ARK Invest ETF fund. Yesterday's purchase marks the firm's second over the last week. On January 5th, ARK added another 172,000 shares of Coinbase to two of its funds, ARKW and ARKF. The investment firm's average share cost is as high as $240, nearly 82% higher than the current trading price, adversely affecting the fund's performance. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.